Good morning. This is Lubu Yankov, Wiser Investor Relations Director speaking. I'd like to welcome you to Wiser Technology earnings call for the third quarter of 2024. For the first time, this call will be conducted in English. Today, we are joined by Wiser CEO, Costa Jordanov,
Good
and the
morning.
CFO, Clement Natkov.
Good
They
morning.
will guide us through the presentation and the results, covering a brief introduction to Wiser, business and financial highlights for the quarter, key milestones for the 2025 to 2026 period, and upcoming events. After the presentation, we will move on to our Q&A session, where you will have the opportunity to ask your questions directly to them via the chat, and please write your questions in English. And now, let's dive into the presentation. Costa, the stage is yours.
Thank you, Lubo. Hello, everyone. Good morning. Thank you for joining us today. My name is Costa Jordanov, and I'm co-founder and CEO of Wiser. Many of you know the company, so I will provide only a brief intro, and we'll then jump right into the Q3 business update. Wiser is an IT services company that is designing and delivering advanced custom software solutions for some of the world's leading organizations. Wiser has a team of over 550 software engineers, scientists, and IT consultants based out of Bulgaria, Serbia, and Greece. The company is a public company listed on the premium segment of the Bulgarian Stock Exchange under the ticker of BNR. And it's currently undergoing a rebranding to Wiser Technology, which would also involve change of the ticker. A few highlights around our strategy. Over the last several quarters, we grew quite actively also through M&A. And an important pillar of our strategy is to consolidate all of those companies and all of those teams under one single company, one organizational structure, and one brand. And while this is not an easy process, we feel that this is essentially the only way for us to reach the necessary brand size and to unlock bigger business opportunities, essentially to put all of our experience, references, client lists, and everything under one single brand, which will allow us to, again, work on bigger and more strategic projects and customers. The second important pillar of our strategy is focus. And this, first of all, means that we are a service company. We're an IT service company, not a product company, and we want to stay an IT service company and to continue to provide end-to-end IT services from consulting to support. And while Wiser, we work for a wide variety of customers, we are designing the organization to deliver exceptional value specifically to certain types of customers. And these are enterprise clients, clients in certain industries that really value precision, quality, security, reliability. And this is where most of our customers are today, and this is where most of our sales and marketing efforts moving forward will continue to be focused. And also geographically to several territories where we feel we could add most value to our customers. And this is the US, Western Europe, Middle East, and the Balkans, where the vast majority of our team is located. And the third pillar of our strategy is to essentially continue to kind of keep the drive to grow actively and continue to push the limits further. This involves continuous investment we are in the knowledge business. So this means continuous investment in technology innovation to make sure we stay at the cutting edge of technologies and we deeply understand kind of those new technology trends, and we could use them, and we use them to help our customers and to deliver maximum value to our customers. This also means domain expertise. It's not enough to be a good programmer. It's also important to really understand the business of our customers, so that we could combine the two to deliver even more value. So domain expertise is also something that we will continue to invest heavily in. And this obviously comes with the industry focus when it comes to our target clients. And then, of course, it's the engineering excellence, which is particularly relevant to those industries. And this is across all of the levels of the organization, from the individual competence to the processes that are being used to execute on the project. We, as part of our strategy, plan to continue to grow both organically and through M&A. So do expect some activity in the coming years, especially after we finalize this kind of round of consolidation of the current Wiser companies into a single brand. And one gap that we need to fill in is the stronger presence, local presence in our target markets. This means, and we're already doing a lot of steps with respect to organically grow our presence there. And by there, I mean Western Europe, US, UAE, through opening offices, through hiring people locally. But also, after several quarters, as we shift focus back to M&A, do expect that we will mostly be looking for M&A opportunities in our target markets as a way to accelerate the process of building local presence. Q3 was another very, very dynamic quarter at Wiser. It is the first quarter after the M&A transactions with Prime Holding and Digital Lights were completed. So in the results for this quarter, they essentially represent the business of all of Wiser, except for Badin, which was the recent acquisition, and we started to consolidate Badin from November. So as a result of the both organic growth, but obviously also fueled by the M&A, heavily influenced by the M&A transactions, in Q3, we saw another quarter of very rapid revenue growth from 1.8 million a year earlier in Q3 for the 3 months of Q3 in 2023 to 7.4 million for the 3 months this year. And not only revenue growth, but also much more diversified client base, which is important from a risk management perspective as well. And Clement will talk more about this diversification and the breakdown of our existing client base and revenue streams. Also, essentially in Q3, we completed the M&A transaction with Badin Software, or at least we kind of did 99% of the work and formally executed the transaction in the beginning of Q4. Our gross margin for Q3 is 28%, which is at the level of the global IT service leaders. You could see the number down there for this is the median Q3 gross margin for the leaders like Accenture, Capgemini, IBM, Wipro, and Cognizant, and kind of the leading companies. And they're at the same 28% margin. That said, obviously they are much, much larger and they have more economy of scale. So for us to achieve solid, consistent double-digit EBITDA margin, we actually need to increase our gross margin as well to about 35%. So we do have work to on our gross margin as well. When it comes to the EBITDA margin, and Clement will talk much more about all of those parameters and what's behind them. When it comes to the EBITDA margin, our margin for Q3 is 6%. And while this is not a number to be proud of, it's at a period of time where there is a major integration effort going on, literally taking 25% of everybody's time. And also continued both investments in M&A as we worked on the Badin transaction in this period of time, as well as investments in expanding our local presence and sales and marketing, which will continue over time. A big I already mentioned that, but the really big part of our efforts in Q3 was to successfully complete the first phase of this integration process. And now we'll talk a little bit more about that on the next slide. We also completed 12.3 million euros capital increase in Q3. We moved to the premium segment of the Bulgarian Stock Exchange. The company was included in the index of the 30th largest Bulgarian public companies. And we continue to both expand our strategic partnerships with some of our partners and new partners, as well as to started a number of new cutting-edge projects for them. And I also kind of highlight a few interesting case studies. On the integration efforts, I should say I'm super proud of what we achieved in a short period of time. And this is a very complicated project simultaneously to merge several companies into one. And I would like to thank all of our colleagues for the really amazing work and for the commitment to see this project moving forward quickly and efficiently. In the 3 months, we built the first and foremost, we appointed a joint management team on a wiser level that consists of team members from all of the previous companies. Number 2, we developed a unified financial reporting infrastructure and financial monitoring infrastructure and centralized all of those operations in one single unit. We also unified the planning process when it comes to financial planning. So the kind of budget 2025 is obviously kind of the first budget that we do now as a wiser level without looking at the individual businesses. We also did a lot to cover some of the most critical processes. So now we have a unified project pipeline management, so centralized, and we have full visibility into kind of the centralized pipeline and monitor and control this pipeline centrally. Same applies for project reporting. So all of our projects are now being reported and monitored using a kind of same unified system. Unified capacity management, unified KPIs across the company. We selected the IT infrastructure and are in probably 50% down the road of migrating all of us to this one unified IT infrastructure. We started the consolidation of the offices in Sofia. So we'll keep only one office in Sofia, which will be our HQ at Synergy Tower, where we're expanding our presence and lease some additional space, and also consolidating the 2 offices we have in Niš. We built a common framework for assessing the engineering competence. And when we talk about innovation and competence, and this is the bread and butter of our business, it's also super critical that we have a common framework to measure and accelerate kind of this competence development across our team. And we now have this joint framework. And last but not least, we also are almost completed the rebranding from B&R to Wiser. And there are a few final steps that are remaining. So a lot of work has been done on the integration. And I think this work builds a very, very stable foundation for the business moving forward. Just a few highlights around some partnerships and projects. We continue to deepen our relationship with Microsoft, and now under 2 different partnership programs. We're also partnering with them. One with relation to digital transformation, and the other one related to data and AI, a category where we actually see a lot of demand from customers. We established a strategic go-to-market partnership with one of the leading Germany consulting companies when it comes to future of automotive and future of mobility, a company that is partially owned by Volkswagen. We started another project for the European Space Agency. These are just some examples of kind of the type of cutting-edge projects and technologies that we work on. We submitted 2 new applications for EOMETSAT, again in the space industry. Built and delivered a very advanced AI-related project, which is called AI Board Assistant for a major client in UAE. Essentially, the project is an AI board member who is participating in board meetings, has been trained on all of the company data, from financial reporting to press releases to everything, and is able in real time to actively participate in board meetings, and when asked, provide information for various metrics, various trends, previous discussions of the board, and all of that. This project went through proof of concept phase and now in production. And kind of last highlight on the project, we also, for another major client, we built essentially AI as a service. So in the cloud, we built an infrastructure where there are pre-trained models that the client and their clients could use to harness the power of AI. Without the complexity to develop the models and manage them themselves, since they're already trained, and essentially it's a model as a service, a large-scale project. And with that, I would like to hand it over to Clement to cover our financial results.
Thank you, Costa. Good morning, everyone. We are, Costa mentioned earlier, in Q3 of this year, we, for the first time, report Prime Holding and Digital Lights as part of the group. With that, we are at 7.38 million in revenues for this particular quarter. This represents a significant growth of 310% compared to the same period last year. Of course, this is inorganic growth mostly, fueled by the new additions to the group. With that, we have an EBITDA of almost 460,000 euro, which represents 6% EBITDA margin. And this is still in spite of all the overhead that we have related to the integration, because as you know, when there's during the integration process, there's a dip of productivity, and synergies and optimizations are yet to be fully realized. Of course, this last quarter, Q3, does not include Buddingsoft, because the transaction was officially completed and finalized in Q4. So this is yet to be, Buddingsoft is yet to be reflected in the reports for the next reporting period. Overall, the growth is quite impressive that we report for the third quarter in the last 5 years. Again, it's mostly fueled by M&A and inorganic growth. But if we did the exercise, if we look at the organic growth for Q3 compared to the same period in Q3 2023, it's close to 15%, which is still, it's a good sign for our potential to grow further. Now, these are the results, the reported results for the first 9 months of 2024. We are at 11.7 million euro. Again, significant growth compared to the same period last year. Now, as Costa mentioned, in terms of expenses, we are, for the first 9 months of this year, we have a significant overhead related to integration. And we have, of course, all the expenses related to the M&A transactions throughout the year. Buddingsoft, Prime, Digital Lights, their expenses related to that on both sides, which are now part of the group. And of course, we are, one of our strategic goals is to expand and improve our sales team. We hired new salespeople active on our clients' markets, Western Europe specifically. And the immediate results of this will not be seen this year, but we hope that our lead generation and conversion of leads to clients and respectively to revenue will improve as a result of this expansion of the sales team. So these are the reasons that the growth of expenses is a little bit fast and higher compared to the growth of revenues. But still, for the 9 months of this year, we report a positive EBITDA margin of 2% or 228,000 euro. The net result at this stage is negative, which is expected to be turned around in the next couple of quarters. Again, these are results based on inorganic growth. Mostly, we did the exercise to check the organic growth, pro forma consolidated basis of the company for the 9 months of this year compared to same period last year, and we have an organic growth of about 10%. In terms of revenue streams, we keep track several intersections, first by industry, geography, and currency. In terms of industry, the largest portion of our revenue comes from high tech. This includes, of course, AI that we mentioned as industry projects, digitalization projects for clients, development of custom-made products. This represents about 49% of our revenue stream. Automotive is the second largest segment with about 22% of revenues. We are pretty stable with this in automotive sector, even in spite of the challenges that the sector is facing, and we don't expect major problems with revenues from this sector. The other streams are financial services, 5%. There's potential for this revenue stream to be increased next year, again, because of the needs for digitalization of the financial sector. Then we have communications with 4% and aerospace and defense with 3%. In terms of geography, our major markets, no surprise there, are Europe and North America. European Union, excluding Bulgaria, is 32%. North America is 31%. Middle East is 14%, which is growing. Last reporting period, it was 10%. It's expected to increase in Q4 and in 2025. And Europe on EU is Switzerland and the United Kingdom is with 8%. In terms of currency, again, no surprises there. Most of our revenues come in euro, more than 50%. Then we have US, about 19%, and Bulgarian levs. These are with 29%. These are local clients and local subsidiaries of large international clients that we work with, but we invoice their local entities. Now, our balance sheet as of September 30th remains strong. Again, as a result of the acquisitions, the assets reached 44 million euro. The bulk of it, significant increase in goodwill because of the new companies joining the group. Our cash position is at 10.7 million euro, which includes proceeds of 8.5 million for the bridge loan, which is used to finalize the Digital Lights transaction and the stock portion of it. This 8.5 million is also reflected in the bank debt category of the balance sheet. We have an investment in Triller at about 3.1 million as of September 30th. Now, this stock is already traded on NASDAQ, and it's expected to be reevaluated based on the actual stock price for the next reporting period at the end of the year. Pretty much as I said, in this balance sheet, it's very important to know that this balance sheet does not reflect the increase of capital, which was completed in October, the 12.3 million additional capital raised, which paid off that bridge loan and provided additional capital for future growth and support of our integration process. As I said, this is a pretty good, solid balance sheet, which will help us to achieve our goals and keep our growth in the next quarters and years. With that, I would like again to pass the baton to Costa to talk a little bit about upcoming events and milestones for Wiser. Thank you.
Thank you, Klimo. Just a little bit of kind of forward looking into what are our key milestones for the next 2 years. And number one is to finalize the integration by the end of next year of all of the companies under the Wiser brand. So this is a project that will continue over the coming quarters, but we do expect to complete it within 2025. Meanwhile, as we kind of progress with this process, we also expect to start realizing more of the synergies and to achieve a consistent organic growth as well as profitability. Our targets are by the end of 2026 to essentially reach 35% gross margin, 15% EBITDA margin, and stable 15% year-over-year organic revenue growth. And we expect to see more consistent moves in that direction in the starting second half of next year, and gradually over this period of time till 2026, including to get and sustain those levels. This also, as part of the strategy that we discussed for local presence, we also throughout 2025 and 2026 will continue to our expansion in those target markets, and this includes acquisitions in those target markets. So do expect again after several quarters, which will still be focused on the integration, to also potentially we'll start exploring after that a next round of acquisitions in our target markets this time. 25, 26 is also a period of time where we need to position as a European up-and-comer as opposed to a East European company. So this requires a complete kind of repositioning of the company. This requires this local presence, which is a mandatory element of the whole thing. This requires a more diverse management team with more representatives from those target markets, from board level to executive level. So we also have plans to start moving in that direction as well, and essentially take all of the steps required for Wiser to become really a true European, pan-European player. Our target is to, putting aside any potential kind of bigger M&A opportunities based on organic growth and somewhat limited M&A activity, we do expect and target to reach 45 million revenue run rate by the end of 2026 and 7 million EBITDA run rate, which we believe is a level of kind of the business that will unlock the next level of bigger opportunities for the business. And lastly, a few words about the upcoming. We have an upcoming General Assembly on December 12th. The agenda covers the renaming of the company to Wiser Technology, change of the address, change of the required majority for selected key corporate decisions to 75%. Those selected decisions include things like distributing more than 30% of the profit as dividend. It includes things as changing the accounting policy, and a few other kind of really kind of key corporate decisions. We also, the board of directors recommended to the General Assembly that we appoint Baker Tilly as an authorized auditor for 2024 and moving forward. Baker Tilly is one of the top 10 companies globally and number 6 in Germany. And this is one of the steps towards opening up Wiser to foreign investors, as well as kind of the longer term game of enabling Wiser to dual list on a foreign stock exchange. We also, I believe, very important for our success steps are related to making sure our employees, and especially our key employees and team members who are the real drivers of the business, are also shareholders in the company. So on the agenda, we have a capital increase of 160,000 shares. which is about the maximum allowed by law, 1% of the capital, to be within 1 year, to be distributed among all of the Wiser team members equally. And then also we're making some changes to the employee stock option program, which is already in place, the program as framework. But we're making a few changes to fine tune and also make sure that it covers all of the employees from the subsidiaries as well. Also on the agenda, we have the appointment of 2 new team members, Klimo and an independent member, a registered auditor. You could see with a lot of experience with some of the largest companies in the region. You could see all of the CVs of the 4 people mentioned here in the materials for the General Assembly, which are public. And we're also appointing 2 new members of the board, our CTO Dimitar and our COO Georgi. So thank you once again for joining us today. And with that, I suggest that we move to the Q&A session.
We have the first question from Peter Paychev. Thank you for the insightful presentation. Given the high staff costs, do you plan cutting the headcount?
We don't. We feel that we have an opportunity to continue to grow organically and catch up a little bit on the kind of larger infrastructure that we built in the company. So we built the company to operate at a little bit larger scale. Our plan is to continue to push on sales to make sure revenues reach the levels where we need, so that the SG&A is at the right level. With respect to one very key parameter for IT service companies is obviously the capacity utilization. For the last couple of months, we're at the level of 77-78%. And by the way, one note, when we talk about gross margins, it's important to also know that the way we measure gross margins and the way we measure utilization is the most conservative way. So essentially, we keep all of the engineering management costs above gross margin, even though those people are mostly not billable. So with that caveat, we're at about 77-78% capacity utilization. For us to reach our goals, we need to be at 85. So we do have work to do, but the expectation is that we'll be able to generate enough revenues to gradually reach to those levels.
Yeah, just to reiterate what Costa said, we've set up a platform for growth, and in order to achieve this growth, we need to have the right people to do it. Now we don't plan any major haircuts because we need these people to achieve our goals. If we are to hit 45 and 50 million euro in revenue, we need the right people, and we have them right now. There was a question about utilization and viewability. Yeah, that's one way to achieve better margins and better profit levels, and we're already working on that, along with the investment in our sales team, which, as we said earlier, is expected to produce results next year and beyond.
Do you plan to lock up employee shares after the capital increase for 2 or 3 years?
So we have 2 separate programs. One is the capital increase. The other one is the employee stock option program. For the capital increase, we decided that it will come with no strings attached. So everybody will be allowed to sell their shares or buy more shares, of course, at any point in time. And those 160,000 shares will be equally split between our participating employees. For the second part, which is the employee stock option program, it comes with still to be finalized, but the plan is to come with 3-year linear vesting. so that it makes sure people who continue to contribute to the business also are the biggest benefits of the employee stock option program. We're planning to do in a very short time frame the first grant to the top people within Wiser, and then to have this process where essentially every year we do additional grants through the employee stock option program to the best performance for that particular year. So for us, it's a retention program, but also a kind of performance inducing program.
If there are no more questions, we will end things here for today. Thank you everyone for the interest. Wishing you all the best, and we look forward to seeing you next time. Thank you and bye.
Thank you, and looking forward to seeing some of you at the General Assembly.
Thank you.
Thank you. Bye-bye. Have a great day.